So first and foremost, I'd like to welcome everybody to today's webinar presentation on behalf of Arc AI and our teams. My name is Sean Kozak, one of the founders here. And I'm excited because what we do every month is we launch a new automated system into the community from our R&D team and our testing team, our trading team. And we get excited when we bring software to the business and we bring it to market, because for many of you that are new here, Arc AI has an entire R&D process that is basically built on the foundation of building and testing successful strategies. Now, what we like to do is we like to put together a framework that can teach you about automation in the beginning parts of these presentations. We're going to talk to you about the advantages of quant trading, the good, the bad, the in-between. We're going to talk about our advantage when it comes to what we've built as an engine for all of our automated strategies with regards to what separates Arc from everything else in the business. And then we're going to get right into the system. We're going to get right into the strategy. We're going to get right into the performance. We're going to get right into the signals. This is an exciting event, mainly because Jeff and I have been working on this on the back end for some time now. And we really get excited when we get to bring stuff to the industry that nobody else even knows exists. And it's sometimes that those hidden gems that people get excited about, and we're fortunate enough to be able to bring that to you guys today. It is a launch webinar, so we are bringing this product to market. This is new, and the product is called Matrix Algo. And there's a reason we call it the Matrix Algo, because for those of you that know anything about programming and coding, and it's like its own little language of its own, right? I mean, if you ever seen The Matrix, how many of you guys seen the movie The Matrix with Keanu Reeves and Morpheus and the red pill and the blue pill, and well, it really is that we've built an algo that literally speaks to that type of of context, and I think it'll be fun once we get into why we've named it that. So my team is here to answer questions. You can put them in the chat box. I probably won't see them because I'm presenting, but my team will definitely help where they can to answer them accordingly, and we'll get to them at the end of the event. It is being recorded so that you can watch this later tonight, tomorrow, and get a deep dive into the information. You normally want to watch these a couple times. It's kind of standard practice. And we'll be announcing a special winner. We give away a free license on these events. There's a special winner that we've pulled out of the draw. So hopefully you're here. You have to be here to get it. And we'll go over all the special details at the end of the presentation for purchasing and all the special offers, right? So what is the all-new Matrix Algo? Well, automated systems are about, but it's basically a bridge into quant trading, right? Quantitative analysis is pretty complex, right? There's some complex stuff. You've got teams, data researchers, quants, programmers, data analysts, you name it. When you get into the realm of quant, it's not normally the retail, right? Retail is retail, funds are funds, institutions are institutions. There's a very big divider line between them. And once you start toying with automation, you're starting to kind of dip your toe onto the cusp of crossing that line into a little bit more of a professional way of looking at the market. Now, you can use some simplistic stuff, and then there's some pretty complex stuff out there, guys. And some of it's very, very effective, but nobody would even dare to venture into the complexities of that. And that's what we've done with the Matrix Algos, is we've taken complex mathematical patterns that there is no physical humanly way possible that you would even know these exist, or they would even be replicatable to you to do manually. And we've automated. We've built an engine and algorithm around the mathematical combinations of patterns with bars and price and the sequences of them. And that's why we call it the Matrix, because it literally is we're getting into the abyss, and I think my entire team took both the red pill and the blue pill when we made this. I can promise you it was that. So let's jump into this, guys. I'm excited. It's new, it's exciting, and it's innovative. I do need to cover a disclaimer, mainly because we're going to be talking about performance, especially with quant trading. We've done a lot of testing. There's going to be looking at some back tests. We've got some templates that are going to be given to traders to use for trading. And can everybody do me a favor and just type Y in the chat box to know that you are in agreement to this risk disclaimer? You accept it, you understand it, and we can all proceed like professionals. I can't guarantee you results. It's not possible in the financial markets, nor do I want that pressure. Past performance can never guarantee future results, and I'm not your investment advisor, so please take your own trades at your own discretion. Yeah, great. So I normally like to lead with this. For those of you that have been in one of our presentations with RKI on the Algo launches, this is a slide that we will always start with because there are people that are new in here and there are people here that are not new, but they're still struggling. Yeah. And wherever you are, whoever you are, whether you're a brand new green around the ears or you're a 10-year veteran with tons of education, but you're still beating your head up against the wall, or maybe you're really good and you're just looking to take it to the next level, I guarantee one thing, that you all want the same thing, right? What is that? What is that? What is it that you want here today? I mean, maybe that's a better question. What is it that you guys came here today to do? You come here to listen to a presentation? You come in here to look at, just innovative tools? Did you come in here to learn something new? Phil says, making money, right? Robert wants to make more money. Phil says, making cash dineros. Harold says, winning trades. William wants to make more dineros, more money, right? Making money is, come here to find nirvana, right? They're swimming on the clouds of the Benjamins, right? Well, there's a lot of things that get put into that category of making money when it comes to trading. And I'm not going to bore you with the same old rigmarole stuff that you've probably heard time and time again, right? Oh, you need to have a trading plan. Oh, you need to do trading psychology. Oh, you need to do this. We're all past that. Quant trading is not about that. Quant trading is about defining alpha. And it involves successful trading, multi-asset trading, multi-strategy trading. It involves you getting out of the way, right? It involves having the ability to test strategies and verify their performance and validate the efficiencies of it. It's about making your trading execution more efficient, right? It's about making things easier for you and something that you can actually proceed with in a better way than just manually doing things all over the place, right? Algo trading is about taking your business and your dreams to the next level, in my experience. In my opinion, when you become a great algorithmic trader, you're stepping into a different realm of this industry. And I believe that. I firmly believe that because I've seen a lot of traders that trade very successfully with automation that were nowhere near that good regularly. Like from a manual perspective, they just blew things up and they ruined their chances of success. Automation is a huge asset to those types of traders, right? So let's get into that. Why would we want to automate? It's different for every reason, but it's the same for most, in that manual trading is not that it's not a good idea. Like, I know a lot of great manual traders. Some of you probably like manual trading. You like to have a trading plan, etc. But every time I have a conversation with even the best manual traders, my brain goes into a different wavelength of thinking. And let me explain this. I've been privileged to meet with some really good traders, instructors, profitable prop firm traders, developers, quant guys, you name it. And every time I talk to somebody who's a discretionary trader, the number one problem that I always see that stops them from success, what do you think it is? Then there's a list here, and that list is valid, right? I mean, people don't have a plan, or they don't know how, they make mistakes, and they miss some trades. Like that's all the list that's on the screen. But I want to get into the stuff that nobody talks about. What is the number one reason why manual traders struggle? And they basically suck. Even though they're making money, they're not making near as much money as they could be. Why do you think that is? Peter says money, controlling emotions, Eduardo. Didn't get into it. Hesitation, fear, greed. Okay, these are all things that I would expect you to say. The real answer, okay, is subjectivity. Even the best traders play bullshit with themselves. They think they know what the market's going to do. They think they understand what's coming next. They have the ego that steps in the way and says, I know what the market's going to do. And I'm talking even the best traders, and you all know what I'm talking about. How many of you guys can relate with what I'm talking about? You look at the market and you say, I think it's going to do this. Or maybe you're a great trader. You've had a couple good weeks in a run and you feeling like $1 million, but you think you've got it handled, right? I'm here to tell you that manual trading is where we are our worst enemy, our own worst enemy. And when you remove ourselves from the equation and we step into the realms of taking a computer and doing that, you remove the barrier that you're putting on your own abilities to succeed. Now, I'm not sitting here saying that you're a failure. By all means, that's not my goal. My goal here is to help you make as much money as possible. And through automation, I believe that's possible because we can increase the accuracy and the efficiency of everything. But realistically, it's the back testing and the optimizing and the real live trading performance that make it so. Back testing is basically where you have the ability to look at performance from the past. And why do you think that's the number one reason why traders get excited about automation? Why do you think back testing is so sexy? Anybody here want to give me a reason? Like if I come in here and I draw a little chart and I run a back test and it looks like this, it's going up and to the right, yes? That, to me, is psychologically telling me that there is some form of evidence that there was some information that was in the past that was repeating itself on a regular basis that gives me enough edge to say, wow, had I have taken those trades, that could have been my outcome. Now, that doesn't mean it's going to continue up to the right because real-time markets are real-time markets. But if you were to compare this, and let's say this is an algo trader, and then you take a manual trader and you ask them to give you their last 100 trades. And they're like, what? Because 95% of every trader in this business, not just in this webinar, doesn't keep statistical track records of their executions, the strategy, the data. They got nothing to go by. In a form, all manual traders are essentially just playing with the casino every day. Unless you're that trader that is laser disciplined, you log every single trade and you have a dedicated trading plan and you trade it the same every single day, which we both know isn't happening. You are no different than a roulette wheel. The difference on automation is you sever that tie between gambling and building a business based off evidence. And this is why quant traders are hired by all the institutions, the hedge fund managers, the firms, et cetera, is because there's an ability to extract alpha. So you need to make a decision. Does that mean you're going to stop being a manual trader? No, I'm not saying you should. But if you're new in here, or even if you're not new, I can promise you this, that if you become good at automation and algorithmic trading, there's a world of understanding that is going to unfold beneath your feet that is going to change the way you look at financial markets for the rest of your life. And we're going to teach it to you. And we're going to give you the frameworks. We're going to give you the strategies. We're going to give you the foundation. I'm going to give you the systems, the signals, the templates, the teams, the community, everything to help you become the best algo trader in the business. Okay. So let me go into this. How many of you guys are excited about automation trading? Give me a yes that you guys are, you're here to take this to the next level. I want to know where your head's at, where your heart's at. Good. So what I'm going to do is I'm going to do something a little different today. Before I get into the signals, I want you to take a screenshot of this. Can you guys all promise me to take a screenshot of this slide? Okay, there's a reason for it. This slide is important because there is no other company in the world that has done what we have done with automation when it comes to building and testing systems. So what I'm going to do is I'm going to get rid of this for a second. Okay. And I'm going to just basically do this. Okay. We're going to open this up. Okay. Now I'm going to basically show you something. Guys, we're going to do this. What we've done, if you go into NinjaTrader, right? We're going to take this presentation in a different direction today. Let's say we go into NinjaTrader, okay? And you go down here to the strategy analyzer, which is NinjaTrader's version of building and testing strategies, okay? If I go up here and I go into Backtest and I go into NinjaTrader's, that's what you get. So we're gonna just draw a little circle around this. That little section. That is in NinjaTrader's backtesting capabilities. They let you pick the signal, which is the strategy here. So you have to have a strategy coded. You have to either buy it or code it yourself. For this example, it's a moving average crossover, right? So this is basically the strategy that they give you as an example. You can choose the fast and the slow, but that's it. Like, that is your algo. And the only thing else you get to do is pick the time frame and the dates, and that's it. So unless you are a wizard behind the coding, or you go out and you buy an algo from somebody, 90% of the algos out there that I've seen just have a new this. They have a new signal. What do you call that? A black box. You're buying somebody's program. You're buying somebody's automated strategy because they said, well, I've got a great system. I've got a great algo. Okay. So you're basically putting all that trust in that guy selling you a strategy. You're going to whip out the wallet, the checkbook, and you're going to cut a check to somebody that just says, trust my algo. You have no way to validate the testing. You have no way to see how it performs, nothing. You just run that algo. Now, the difference between ARC is that we're not okay with that because that's not algorithmic trading. That's called being a sucker. And what we've done is we've rebuilt NinjaTrader, the engine inside of NinjaTrader. So what you're seeing here is a rebuild. This is ARC's engine. We call this the engine. Why is this important that we talk about this before we get into the signals? Because it's like your spine. You can't walk without a spine. Like your world would suck without a spine. And what we've done is we have the signal. This is the signal component, okay? Then what we've done is we've built a multi-execution component, which allows you to choose your strategy risk, your quantities, your position sizing, your account balances, your order execution entry types. Then what we've done is we've created a stop loss algorithm section where you can control the stop losses, right? This allows you to choose whether you want to use tick-based stops, volatility stops, you want to use an algo stop, you want to use, I mean, this is what I'm talking about. And then you come in here, let's just go down. Then we've created a section for targets. We have the ability to create multiple exit strategies, scaling out of targets, algo targets, tick-based targets, volatility-based targets, all in, all out, trailing stops. Then what we did was we created a time section where you can control the start time and the end times. Then you can block times where if you don't want to trade lunchtime, or if you don't want to trade the crude report, or maybe you want to basically remove holidays from your schedules because it throws off all your data. You've got a back test and you want to run it, and you've got Martin Luther King, and then you've got a day where there was an Easter weekend, and it just screws up your data. Like when I mean we rebuilt Ninja, we rebuilt it. There is nothing in the business that operates like this in the algorithmic section. Then we added a money management section. Then we added trend and momentum filters so that you can use trend filters, market structure filters, momentum filters for direction or reversals. So one of the things I want to talk about is whenever we roll out an algo, you're getting the system, which is the signals, which is the strategy, but we give you the engine with it. It's the core backbone to what separates Arc AI from the business. And it's such a powerful piece of tool that we have the biggest companies in the industry now wanting to distribute it. The biggest players are now coming to us because we've pioneered quant trading in the business. So why am I saying this? Because for those of you that are new, or those of you that just think, oh, it's just another algo, I can assure you it's not. I can assure you it is not. And so we're going to go in here and say, this is what separates us, because you're not just getting an algo, you're getting a complete infrastructure for quant testing and building and optimizing and testing alongside the algo. It comes with the signal software, which we have training on, and we're going to give you training on, and we're going to run AMAs on it, and we've got training on it. We've just such a hand-holding experience around that. We're going to teach you how to use it, and we're going to teach you how to become the best automated strategy trader in your dreams. Like if you're new to this, I assure you, you're in the right place. Okay. How many of you guys are excited to learn how to do this? How many of you guys would like to learn how to build and test and optimize all the strategies that we have, including today, this one, and including that? We're going to throw some educational events on this. I know a lot of you guys have wanted to basically learn more about it. What we're going to do after this event is we're going to roll out the Matrix Algo. Jim and Jeff are going to throw together a training session tomorrow on this system. And then we're going to put together a deep dive engine strategy webinar sequence so we can just bring everybody together. And we're going to show you how to optimize and max out the performance on all the systems, including this one. Okay. There is more. There's always more. So we've been focusing heavily on price action a lot lately, and there's a reason for it. We're big believers in price and volume. I'm a big believer in price, volume, and order flow. Those three are the primary drivers of everything. A lot of price action algorithms have been in our queue lately, mainly due to the fact that like price is king, price is price. You get better data, you get better accuracy with the fills, you get actually better you get better back tests. You can build more complex algorithms simpler in a way where you can take pattern recognition and it's more reliable. So the reason we spent on price is because it's a little bit, how to say, it's a lot more profitable. It's a lot more essential. And so the reason we want to talk about this is that, you know, price action is not always easy. Like as much as you think it's easy, it's not. Like there's patterns your eyes are not seeing. There's things that are happening in the market that your just brain isn't even cognitively aware of. Right. And, you know, you and I and 100 people could be in a room and we all look at one chart and we all have 100 different opinions on what it's doing. And that's where algorithmic trading removes that subjectivity and it puts us into an objective state. So what we're going to do today is we're going to introduce a price action algo, and it's based on mathematical pattern recognition. I think it's very, very effective in that it's based on pattern recognition. It's patterns that repeat every single day in the market, and it's based off different bar sequences, and we're going to get into that. What's nice is that we have auto-adapting money management that's built into this so that you can actually set this up to be working with prop firms. So if you're a prop firm, or if you're looking to essentially trade for a prop firm, you cannot follow the standard money management settings that like you would normally use. Like you're not going to risk 2% of your account, or you're not going to go into, you know, risking 1% of your prop firm. Like if you bought a $50,000 eval with Top Step or Apex, you can't risk 2% of that on a trade. Like so we've built automation solutions for money management that auto adapts. And what we're going to do today is we're going to show you how that's put into place with the Matrix Algo. So how many of you guys have understood what I've talked about so far? It's kind of an overview. It's the first 20 minutes of the presentation. I want to make sure I normally lead with that because if you're new, I need to set the tone, right? If you've been to one of my events before, you get it. Every month, I'm going to say the same thing because you got to beat it into the draw. Like it's like, if you're going to get good at something, you got to repeat it. You just got to be repetitious, right? Like it's important. So what is the Matrix Algo? The Matrix Algo is the most unpredictable, misunderstood anomaly that you will ever hear come out of our queue. That's why we call it the Matrix. You don't even know it exists. Have you guys ever seen the movie The Matrix? Give me a yes if you've seen it. You know, Neo goes with Morpheus and he goes to see the Oracle. and the two guys are sitting down on the floor. The two kids there, you know, they look albino, right? And they're sitting there and they're bending a spoon, right? And Neil looks at him and he's like, "What are you doing?" And he's like, "The key is there is no spoon," right? Basically saying that we're not really here. It's all an illusion, right? Well, there's things that are going on in trading that are not really you're aware of. You're not aware of them. You just don't know they're happening, but they're happening right below your eyes. And they're normally mathematical. They're completely random. They're unpredictable. You will normally never do this manually. You cannot repeat it manually. And this is where quants come in. This is where like the programmers, the data scientists, the guys that are looking at things that are mathematically only possible until you put like things in motion, right? And we went to the drawing board. We started doing this. We spent a lot of time putting together this. I mean, when I first met with Jeff, I said, we're going to build a quant mathematical algo. He says, what? I say, yeah, there's some edge to this. I've been following some quants. I'm a part of some quant groups, and I have a lot of. I'm privileged because we just acquired TickBlaze, and we've got we're branching into an algorithmic environment, working with quants and hedge funds and institutions. And I get sometimes I get a mulligan. You know, I get to meet with some pretty smart people, and I get ideas and I get innovation, and we bring that to the R&D table. And that's exactly what we're going to do with the Matrix Algo. So we have 3 different variations. You have 3 different bars. And this is where we're going to start assigning a matrix. So you don't have to do this, but I believe in going under the hood. Okay. You don't have to do this. The software does this, but I want you to essentially learn it, and I want you to understand it, and I want you to be able to basically kind of decipher what I'm showing you. Okay. Bar number 1, any bar that's labeled a 1 is an inside bar. Okay. Bar number 2 is a directional bar. Okay. Up or down. Bar number 3 is an outside bar. When you take those 3 types of variations, it makes up for every single type of candle that exists. You can only ever have a directional bar, whether that's up or down. You can only ever have an inside bar, whether that's up or down. Or you can only ever have an outside bar, which is up or down. Bar direction means nothing here. What matters is that you understand that there are only ever 3 types of bars mathematically in the business. Does everybody understand that? Exactly. Binary, hexadecimal, quant shit. Right? Like, let's just keep it simple, Neon. Right? Like, I like to make jokes about it. Once in a while, I'll cuss on the mic because I like to talk to you guys like we're friends and we're sitting at a coffee shop trying to make money in the markets, right? The point of this is that this is some complex stuff, guys, that you probably would have never looked at. There's only 3 types of bars ever in the business. Like, doesn't matter any type of chart, whether it's a tick chart, a volume chart, a time chart, any type of variable range candle can only ever be fit into those 3 bars. Okay. So when you take these 3 bars, there is a myriad of combinations that can be put between those 3 bars. Mathematically, price is going to do different things, from being a direction to a volume is all. You could use a volume chart, Richard, any variable range candles. If it's a tick chart, a volume chart, just not Renko's, not range. There's no edge to that in this type of a system. These are all variable range functions. Yep. So let's take a look at this. The time frame is irrelevant, right? This is a screenshot from our user manual. I want to talk to you. So you can see here's a 322 calculation. So a 322 means that there's an outside bar followed by a directional bar followed by a directional bar. Okay. And then on the other side, there's a 322, right? This creates a form of a reversal, but you wouldn't know that it's a reversal, right? You will just know that the software is going to identify that this is an outside bar followed by 2 directional bars. If you're looking at the short, you'll have an outside bar, and then you're ultimately looking at 2 directional bars. Okay. And bar direction doesn't matter. So this is what makes it difficult for humans to understand this, is that, you know, you could be looking at an up bar and then a down bar, and they're both directional. So I don't want you to go deep into it has nothing, it's not always higher lows and higher lows. It's the bar direction with basically breaking out of the prior bar's ranges, breaking the prior bar's candles. So there's a lot of things that go into this, but long story short, it goes back to this. You're either an inside bar, a direction bar, an outside bar. And then we start putting sequences into how those bars can be combinated. Now, we can go down the rabbit hole, right? But I'm here to make it simple, okay? Because there's certain patterns that really, really hit really, really solid performance, and then some of them don't. Here's a 2-1-2. This is a directional bar with an inside bar with a directional bar. And this is a reversal, a breakout. This can be traded both. We call them reversals because they're pivoting in the market. They're not technically reversals. This could be in an uptrend. You could get this pattern in a pullback in an uptrend, and you won't even know it's happening. That's the thing. Like, you won't even know that this is happening because you're not even paying attention to the sequence of the math or the sequence of the pattern, because this isn't dojis. This isn't like shooting stars or engulfings. And like, this is literally mathematical sequences of multiple bars. You have to have the combinations, which is what makes it different. This is what makes it mathematical. You have to have the outside bar, the inside bar, the directional bars, and how they play a factor to each other. And this is where we went into the abyss, right? It's like this one here is a 2-1-2 pattern. And I'm here to tell you, like, you don't even know what's happening until you put numbers on it. You're like, wow, okay, now I see it, right? I can see it. Here's a 3-1-2 pattern, right? A 3-1-2 pattern is an outside bar, an inside bar, and a directional bar. Like, you don't normally get 3-1-2 patterns because you don't normally get an outside and then an inside. And so these types of things are unique. And so there's a whole lot of different ways in which you could probably structure patterns. We built the system on these three foundations, that these three were the ones that hit the best performance that we were able to make. And that's the whole point. And we're going to get into that here in just a moment. So let's just kind of go back here for a second. You got an inside bar, you got a directional bar, you got an outside bar. There's only ever 3 bars. They're either going to be numbered 1, 2, or 3. And it's the combinations between these that make up the system and make up the signal. Does everybody understand that? Yes or no? I'm hoping so. You could label them 7, 8, 9 or ABC, or plus minus 0, or you could put whatever matrix you want on them. You could create matrix number 2, matrix number 3, like John Wick, right? No, all jokes aside, guys, this is a mathematical sequence algo that we take combinations of the algo and we put the patterns together to form really, really badass trade signals, which can be optimized and can traded. And we're going to get into that here now. So it's interesting, right? Like, I love this. I love watching the business. I love watching when you're a major vendor selling automated systems and you see a lot of other vendors, and I'm not here to talk about them, but I'm here to kind of bring reality to the space, because I do think it's important that you learn, for those of you that are in here learning, that you understand that there's going to be a lot of marketing out there. Yes, we do a lot of marketing. Yes, we do a lot of sales. Hell, if we don't sell our products, we're not going to have a business. You need to sell to keep a business going. Yeah, makes sense. It's like a restaurant. If you're not selling food, you're not going to be making any money. But what really gets me going is that you see a lot of traders out there, or vendors, or educators out there that are promoting strategies with like a 1.2 profit factor, and they're trying to sell you this shit. And like, anything below 2 to me is like everything above 1 is profitable. But like, I'm not okay with just using strategies that have a 1.2 or a 1.5 or a 1.7. Heck, I'm looking for 3s. I'm looking for 4s. I'm looking for profit factors that have alpha. And so when we build automated systems, it's not just about the signal. I just have to have a good setup. Like, you know what I mean? Like it's not just about making money. Like you can either play with the kids or you can step into a different league. How many of you guys want to be in a different league with your trading? Just give me a yes that you would rather learn from the real good guys that can sell you the strategies that have very good efficiency and execution and very good alpha. Or do you want to buy a bunch of strategies that are put together with some random crap that are ultimately just pumping sales, right? Like, our R&D team is all about optimizing results. And if we build a system and we don't get the results that we are happy with, we don't sell it. We don't bring it out. We've got strategies that we've spent money on development, and we thought they were going to be great, and they didn't turn out great. And I threw them in the trash. Cost me a lot of money. I just won't do it. I won't bring anything. I won't bring anything out that we don't feel has an edge that can be repeated, exploited, traded, and optimized on an ongoing basis, right? So what we're about to do here is we're going to show you some performance over some of the setups. You guys are going to like what you're about to see. We're going to talk about that, right? But I just think I like to set that tone because I've bought products. I've paid for software. I've paid for education through the life cycle of my career. I know what it's like to buy something that I don't like, or I don't want, or I felt like I got ripped off. So when you're looking at ARC algos, we have a guarantee at the back of it, which we're going to talk about, which is love it or swap it. We got all that stuff. We'll get into that. But today, when we get into the foundation of the results, I just want to share with you, we have a very strict foundation around that, and we're going to get into that. A couple things here I want to talk about. The money management. If you're using an algo that has variable range bars, okay, you have to use auto-adapting money management. Let me explain this. If you're using an algo that is using anything with different size candles, you need to learn what to do when it comes to auto-adapting money management. Because if you're using bars that change size, what'll happen is if you use a stop size that is just fixed, or if you use money management that is just fixed and it's not adapting to the condition of the market, or it's not adapting to the price action or the volatility, you're not going to see the results that you could be, and your position sizing is going to be all over the place. If you don't know what I'm talking about, come to the AMAs. I promise you we're going to show it to you, because this is we spent a lot of money in building this into the engine because we had to. It's not something that was like, well, maybe we'll just leave it and we'll figure it. No, like, you have to do this. This isn't something that, well, maybe I'll try this. I'm telling you that everybody in here needs to learn this. It is like breathing when it comes to money management. And so we've built it so that you don't have to worry about being a victim to screwing up your position sizing with variable and dynamic bars. Okay, so does everybody give me a yes that you'll be dedicated to learning about our auto-adapting money management in the user manual, in the videos, in the AMAs? Because I take this rather serious. If you're going to invest in our products, I want you guys to know how to use the things that are going to move the needle for you. It's not just about how great the signal is. There's things that you can do that are going to take your performance and they're going to take it to a different level. But you have to commit to this. Just give me a yes that you guys are willing to learn it. You'd be surprised the answers I get. Good. So one last thing, because I know I get questions on this, and then we're going to get into the charts. We're going to get into this, okay? This is not a black box. This is an automated signal, an automated strategy, an algo that has a black box signal, but an engine that removes the black box restrictions. So yes, we're giving you the signal. The signals are hard-coded. You can't change the actual signal. You get to choose the signal, but you can automatically trade it. You can semi-automatically trade it. You can combine it with a manual system or a non-manual system, but you can trade it with prop firms, because we've built the on and off switch so that you can manually step in and turn the signals on and off, or manually step in and override them, so that you are not in violation of getting funded or running algos for prop firms. How many of you guys think that that's a good idea? Because that's in the contracts. You go to Top Step, you go to Apex, you go to these other prop firms, they have it in their fine print. You can't run black box algos. You can run our algos with these firms, which is why we built this. Okay. So let's get into the demo. Let's do it. So in the past, we would only run systems for one market because everybody trades the S&P. But we always get questions. What about the Russell? What about crude oil? What about the NASDAQ? And so Jeff and I went back to the table. We said, getting a lot of questions about these algos. Like a lot of people are using our algos. I said, yeah, You say, but like they want the templates on the NASDAQ. Okay. You want the templates on crude oil. So what we've been doing is we've been spending a lot more time building templates for all of the other markets. It's a lot of work, guys. Like when I mean a lot of work, we have one guy that spends his entire month testing algos for all of our traders and then providing templates so that you can have a ready go, pre-built, white glove, done for you, turnkey solution right out the gates. And instead of doing it on one market, we've now done it on 4 markets for the matrix. Why? Because it's a price action mathematical system that showed very good promise on every market we tested it on. So some strategies work good on like one market, right? I've got this strategy ripping on 4 markets right now. And like, that's fantastic. Like, you know, you have something when you're not just forced to just trade one market. And we're going to get into this. So which one do you want to see first? Let's let you guys drive it. You want to see the Russell, the S&P, crude oil, the NASDAQ? Which one do you want to look at first? You guys drive it here. NQ. So this is cool. Michael hit the NQ. So let's talk about the NQ. So the NQ is our one and done template. So there's 3 high frequencies. So let me say this. Great. So let me talk about this. This one here. So 1, 2, and 3. These are all signals. What you'll see here, we have the template named all signal. Basically what that is we've turned on all the signals. Okay. This one here is 2 signals. These are both all signals. These are more frequency trades. So these are going to have more setups in a day. But we also wanted to have a one and done. This is a low frequency trade. And this is basically a low frequency setup on the NASDAQ. And so we did this on purpose, mainly because some traders don't want to trade a bunch of setups. They just want one that's very, very successful and it hits all the time with consistency. And then there's others that want a lot of trades, right? So what we've done is we have it. So the NASDAQ is a one and done setup. It's designed that way. It's not that you couldn't trade 5 or 10 trades in a day. It's that this template was designed that way. So essentially, this is for prop firms. This is designed for prop firm trading. This is a quick target. So that if you're running multiple if you're trading with trade copiers and you're wanting to be in and out, it's designed for trailing drawdown trading. So those of you that are trading in a trailing drawdown scenario, it's going to have a high win rate and it's going to have quick targets. Why? Because it'll allow you to get through the evals quickly without having to worry about losing your trailing drawdown. That's why you're going to see it's a 0.5R multiple. That's on purpose. That's on purpose. We designed it so that if you're taking trades, you're taking targets quickly. You're not having a trailing drawdown that's creeping up on you. Very high win rate, very solid profit factor, very low drawdown. Okay, someone's mic's not muted. So we go into this. It's going to run that back test. I think it's because I loaded it, Jeff, and I didn't run the back test. So we're going to let this run here for a second. While we're running that, let's give it away. Let's do it's running the back test because I loaded the workspace. I forgot to run it. So while we're waiting for it to run, it'll take a second, guys. It won't take too long. Let's give away our license. Let's give away a license. So Jim, you there?
Yeah, I am here. I have a winner. The winner is Marius. Marius, I don't know if you're here. I will look in the list and we will see. Maybe he's here. He, she, I'm sorry, I don't know the name. You won.
Marius,
so congratulations.
Brother. Lady Luck is on your side.
Yeah, freebie to you. So
Amazing.
we'll send you an email with, yeah, absolutely. We'll send you an email with the details and you'll get a link with your, you can go log in, download it, all that stuff. Our team can help you too. We'll talk more about that.
All right. Marius, you're on it. Johnny on it. Everybody give Marius a round of applause. It's always good to win. Whenever I hear somebody else win, sometimes people get upset because it wasn't them. I've always been of the mindset that you want to be helping people, right? Like giving is always more abundant. Yeah. Congrats, guys. So how many of you guys like that equity curve? Now, this is the one and done template. Okay, this is the template. This is the daily profit for the last, I don't know how many days. It's massive. We've got over a month of data. This is a one trade a day. This is designed for one trade a day. It's designed for one trade a day. People always ask me that half hour of the day. This is the consistency. We could see, this is what a lot of, you'll see, this is when a lot of people will sell you the sizzle. And if they run a back test and they basically say, oh, they had a losing part here. Oh, I had a little bit of losses there. Okay, cut out that time of day. Like, that's called curve fitting. We're not here cutting out a bunch of times a day, guys. We are here to accept that you are going to have sometimes a loss at a certain time during the day, and you're going to have to let that play out. So be very careful that you do not take a template or something and start removing too much out of it to get the perfect back test. We did not do that. All we did was tweak the settings to be able to be optimized for the 312 signal. You see here's the signal. And this is essentially hour of the day, right? Most of your trading, it even trades well in the afternoon too, which is interesting. This template went well into the afternoon. Let's go into the chart here for a second and you're going to see. So let's just take a look at this for a second. Okay. Take a look at this. Now, if I'm looking at this, I can tell you right now, like if I'm looking at this environment, let's just take a look at this trade setup for a second, okay? Market comes down, boom, 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 puts in a higher high, breaks the structure, okay? You get the impulse leg. But what's interesting is that you see this as a pullback, right? Our algo doesn't see it as a pullback. Our algo sees it as an outside bar, followed by an inside bar, directional inside bar, followed by a directional bar. That's what this is. This is the 3-1-2 pattern. And this is exactly what I mean by finding the patterns. There's a little stop. You're gonna have it once in a while. Let's go back. This is a one and done. So let's go back here and find it. Basically, let's go back and find some trades. Let's go here and take a look at these two trades. So this pattern doesn't give a lot of trades because it doesn't happen. Why? Outside bars don't happen a lot. So there's a pattern here. This was the short, came back down. This was the long, came back down. What do you see about the difference between these two patterns? It's the size of the candles that are different. It's the size of the bars that are going to change, which means your stop size is going to change, which means your position sizing is going to change. And this is what I mean by auto adapting money management, is that when you have a pattern that has bigger bars, bigger patterns, bigger, etc., your money management will automatically adjust your size independently of each trade so that you're not sitting there having to figure that out. Let's go back here. One and done trades, okay? Quick, in and out. Take a look. Outside bar, you wouldn't see this. Like all I see here to the naked eye, and this is being straight up honest with everybody, I just see a bunch of noise in here. It's just a range bound market. What our algo is seeing is there's an outside bar followed by an inside directional down pattern, which is exactly what this algo is designed to do, is find the mathematical sequences and exploit them. That's what quants do. Quants do not try to predict direction. They don't try to figure out what the market's going to do. They look for repetitive things that are happening with an anomaly of mathematics. Most quants are coming out of data scientist degrees or mathematical engineering degrees. And that's exactly what this algo is designed to do. So let's just go back and find a couple of the other templates. We'll leave this one up here because this one is pretty amazing in terms of the NASDAQ. We'll leave it at that. We'll just leave it at that. Okay. Which one next? You want to do the S&P? You want to do Russell? You want to do crude oil? Which one you want to talk about? Crude. Yeah, crude's a unique one because it's actually a more difficult market to find performance on. That looks pretty damn good. How many of you guys like to trade crude, but yet you don't get a lot of strategies that perform well on crude? I've seen that. I've seen a lot of stuff work really, really well on the indices, but crude is a fickle beast, man. And it's an energy market. It has a brain of its own. It does what it wants to do when it does what it does, right? And you know, political stuff in the world makes it move. Supply and demand makes it move. You know, war, things like this, international trade, these types of stuff. It's not as predictable as the index markets. Rightfully so, we were able to get some pretty good expectancy out of it. Let's talk about it. So this one here, now this was what blew me away. This blew me away, is that this is almost a 1-to-1 with a 70% hit rate, which means that's sexy. For crude, I was impressed. Like, I run a lot of systems. I run a lot of algos. We test a lot of stuff. We've seen a lot of great performance. This is very, very, very stable. When I mean stable, if you're a crude trader, this is something you're going to want to pay close attention to. A 70% hit rate with a 0.85 multiple is very, very sexy. To produce 12 grand with a $1,300 drawdown, right? And that's, you know, 90 trades, 100 trades under that sample size. That's pretty damn good for crude. Like, and this is two patterns. So this is looking at two now. You've got one pattern. This is the 2-1-2, and this is the 3-2-2. Say that 3 times pretty fast. You'll be like, what? So let's go in here. Let's take a look at the data. So if we're going to go in here and take a look, how many of you guys like that equity curve? Yeah. It's pretty significant. It's pretty sexy. Okay. Let's go half hour of the day. Jesus Christ. You did a good Jeff here. Jeff spent a lot of time on this one. Yeah, this is fantastic. What's unique about this is it's all the way through the entire session. So normally you are going to see periods of time when it's not making money. Well, Dancel, I'm telling you, this is just our templates that we've built. We will give you these templates. You can have them. You don't have to try to figure it out. This is on what time frame is this? 5 minute. This is on a 5 minute. Yeah, this is a 5 minute candle. Yeah. Yeah. Let's go into the chart. Take a look. So this one here, let's go find a couple trades. Yeah. Had a losing day there. Nice winning day here. Let's take a look. Let's take a look at the status on this. Okay. So short here, short there, short here was a stop. When I look at this though, and this is what blew me away, is that when I look at this, my mind tells me, okay, there was a bit of a trend. We went into a range. We had a fake out. We went back. Like, my mind is looking at a whole bunch of different things here. What this algo is doing is not even paying attention to that, because we're looking for a 3-bar pattern that basically repeats itself based off a mathematical sequence. And so this is what removes that ambiguity of, like, you're not trying to figure out what the trend is doing. You're not trying to figure out. It's just whenever the mathematical pattern presents itself, the software executes because it has a high likelihood of repeating the follow through on the 3rd bar break. And let's just go back and find some more setups. Let's take a look at this. What do you see here? Like, I see a range. I see a smaller range. You could say, well, I have a trend. Well, then the trend broke. Well, so what the hell is this? Like, this doesn't, everybody's going to look at this. Well, there's a trend, there's an upside. So when I look at this, I say, okay, well, you can try to interpret this. The software is going to go in and it's going to look for the 3-bar pattern, which is here, and the 3-bar pattern here. We never know when it's going to happen. That's what makes quant trading so sexy about, you don't know when those 3 bars are going to happen. But when they do, it's because certain things are happening in the price action. And when it does, quant execution executes the way it's supposed to be. Okay. And so this is what makes it completely random, completely unique, and very successful. For crude, I've never seen templates like that for crude. And, this is 2 months of data, 100 trades on crude. That's a lot. That's a lot of crude trades. You'd normally see that type of execution on the NASDAQ. And, this is a 5-minute bar on crude. For the NASDAQ trade, what were we doing this on? This was on 1-minute charts. Yeah, 1-minute charts on the NASDAQ, 5-minute. You can see we were testing different time frames, different markets on the same types of signals. This is what's unique is I could put this on a volume chart. We never even tested tick bars. We could test this on volume charts, and I'd love to see the performance. I love volume-driven price. I love it. But time is a little bit faster. If we're going to do this many markets, we need to be able to perform enough data sampling in order to get it to you guys over that much markets. You want to look at the Russell, or you want to look at the S&P? ES? Neon says, S&P, Jose says. Okay, let's take a look at the S&P. Real good profit factors. This was designed for prop firm trading. So whenever we design a template with a 0.5 R multiple, it's because 80% of our customers are trading for prop firms with trailing drawdowns. And so we're not trying to go anything above 1-to-1. Like, that's done on purpose. A lot of people are like, well, why don't you go for a 2-to-1 or a 3-to-1? Because I don't want to blow out my evals. If you're sitting there trying to get funded or stay funded, you are not trying to swing for the fences every day. They will blow you out. They will kick you out. Even if you're funded and they see that you swing trade like that intraday, even if you're funded, I've seen them cancel your accounts. You don't meet the rules of how a good strategy should be traded. You have to be aware that prop firms want you taking quick profits. So yes, I know that plays with the heartstrings a little bit in that. Yes, you have to have a high win rate. It could definitely, you could blow up if you don't. Well, we always optimize for high win rates. That's the whole point. I want to have high win rate accuracy. I want to have high trade expectancy. I want to have high profit factors, and I want to have quick targets. Right? And anyone who wants to challenge us on that, I can show you mathematical sequences and circumstances that's more profitable and more stable. Right? But most retail traders don't think like that. They think I need a 1-to-1 or I need a 2-to-1. And that's wrong. In what regard? Quant trading can prove otherwise, statistically. So 87% hit rate, $100 trade expectancy with a 0.5 R multiple, 25 consecutive winning trades in a row. All patterns. This is the S&P. Yes, the S&P is the most traded asset in the business. So we put a little bit more, we put a lot more behind it. We want to basically see that. Yeah. So, I mean, a 3+ profit factor on the S&P with a close to 80 trades in 1 month. Like, if you took 80 trades on the S&P, that's a lot of trades, man. Right? That's a lot of trades in the S&P in 1 month. Like, 80 trades is a lot of trades. It's on a 1-minute chart, S&P. $7,000 profit with a $700 drawdown in 1 month. That's like, you're not even closely in the realm of failing on an eval or a prop firm. Like, the drawdown's low. That's the whole point. That's the whole point. Build the systems for what you want them to do, not for what you think they should do. Very stable. The losing days are not big. Okay. This is why we build these, because we know that everybody is trading for prop firms. Right? It's what we're doing. Let's take a look here, half hour day. Well, what time is the best time to be trading this? Funny that. Lunchtime is the only time you're losing money. We stop trading. Don't trade during noon, and most people aren't trading in the S&P in the afternoon. Right? And that's when the stock market is pumping. The S&P tracks the stock market, right? It's trading the S&P 500 stocks. It's an index. Most traders are trading the S&P in the morning. Isn't that a day trader's dream? Guys, we spent a lot of time on this algo because of what it does. And this isn't a normal system in our opinion. Like, this is not based off of indicators. This is not based off of lagging stuff. This is based on mathematicals, right? And if anybody wants to learn more about that, we can definitely do more training on mathematics and understand what that is. But for the most part, I just want to share with this. Like, let's go take a look at this. So this is the S&P. Let's go take a look at this. Let's go back, and there's the big flow, and let's just go back and find, I just want to go back some random day and time. Let's go find a day. Right here. Let's just go find this. So take a look at this, right? Like, this one, plug the reversals on this day, right? Pattern was here, down bar, directional bar, up bar, directional bar, up bar, directional bar. This was down, up, up. Like, these are just different pattern sequences, but I can promise you, you'll never know when they're coming. So exactly, math is complicated. Let's follow your signals and trade. So let me explain this. This isn't the type of algo that you're going to sit there and try to be like, oh, I think it's going to do this, or I think it's going to do that. No, 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 no. That's not what the matrix is designed to do. The matrix is designed to do one thing and one thing only. Look for these sequences. That is it. You will never know when they're coming. You'll never know why they're coming. The market's just going to do what it's going to do. Mathematically, they're going to appear. Okay. They're going to happen. And you're going to let the system basically do what it's designed to do. That's some pretty significant trading right there. Right? That's significant trading. Let's take a look at the Russell. Haven't looked at the Russell in a long time, to be honest with you. Which time frame did Jeff put on the Russell? Let's take a look here. 1 minute. Holy shit. Amazing. You really did it, eh, Jeff, on the Russell and crude, eh? You rocked it. He pulled out some voodoo shit on this. He's got some crazy templates right now on the Russell and crude. These are crazy. 80% hit rates with an 8R multiple on that. Okay. 3.5 profit factor. Massive. But I'll tell you why the Russell and crude are doing well on these, because if you don't know anything about crude and you don't know anything about the Russell compared to other markets, they have a high tick to spread ratio. What does that mean? They're very thin markets. So thin markets tend to pop. When they move quickly, and they trend very quickly when they're moving, because they're thin and they're on a 0.10 decimal marketplace. Like they move in 0.10 increments, right? They're in 10-cent increments, right? So these markets are known to be very big trending markets when they pop, which makes sense, because if you have a reversal pattern that has a bar sequence that's got a pop, right? And it's got a pop, you're normally going to get strong follow-through reaction on the signal. I don't care what you say. That's huge expectancy with 13 trades in a row with a 0.8 multiple with almost an 80% hit rate. Like, that's insane. Sometimes I'm so proud of my team because they're so good at what they do. They're good. All I can tell you right now is that you're not getting one template. You're getting 4 on 4 different markets that have over 3 profit factors across the board, which is why I'm excited about the matrix, because it's mathematical. You can't do this on your own. Let the system trade for you the way it needs to be traded. And one of the things you can do is you could run it on 4 different markets, put it on 4 different accounts. Unlike some of the other systems that we've produced that you can only trade on 1 or 2 markets, this is designed for everything. And it's actually designed for the 4 most favorite markets that most day traders are trading: the S&P, crude oil, the NASDAQ, and the Russell. Right? How many of you guys think this is pretty sexy? Give me a yes. This is some of our finest work, and it's really, really, really kick-ass. I can tell you that right now. Yeah, it is sexy. Inside bar acts like we didn't do gold, Joseph. Yeah, no GC today, baby. Can't do it. So why don't we do this? Just a couple things I want to mention is that we've built the templates. So these are the 4 templates that we're going to give you for each of the markets. Most of them are on 1-minute charts except for crude oil. Okay. So you're going to get this one, this one, this one, this one. It comes with the system. Okay. Let's go into the pricing, and then let's talk about the guarantee that we offer, and then let's talk about the AMA that we're hosting and the training so that you guys can get up to speed on the engine, and we'll talk about that here in a second. Are you guys okay with me going into pricing? Has everybody had a good enough demo on that? I don't think there's anything left I can do other than just keep showing you profitable performance. It's pretty fantastic. But let's get into it. Vishal says, I'm not sure, Vishal, you have a question. Did you put a question in here? I didn't see it. Like I said, I'm not reading the chat that much right now. Let's talk about launch pricing. So essentially, the algo itself, the signal. So let's talk about the signal. This is the signal. Okay. This is the engine that we talked about, which is rebuilding inside a NinjaTrader. They're 2 separate components. Every algo has its own group chat. The reason for it is every algo has different templates. So you want to keep the chat to those algos, right? We've got order flow chats. We've got volume profile chats. We've got price action reversal chats. This will have its own chat. So that way, everybody that uses this will have the ability to communicate with each other inside the chat. I highly recommend that anybody here that is using our software read the user documentation. We are very good at documentation. We spend a lot of time making sure the user manual explains the concepts, understanding this. And can you guys do me a favor and just type a yes in the chat box that you promise me that you will spend just 1 day, read it. It's lots of pictures. It's not a bunch of text. It's just very, very useful. Good. Don't come to us. Say, well, I didn't know that, when it's clearly in the user manual that's literally only a couple pages. Guys, throw me a bone here, will you? White glove install support. Some of you guys don't know the first thing about NinjaTrader or algos or templates, and you just need some help. We have a dedicated team that will log onto your computer and do it for you, make sure you're up and running. This to me is worth 10 grand. I know algos out there. I know guys out there pumping algos for 5 grand a pop, packages, and they're selling their templates like crazy. We spend a month building these templates, an entire month with people. The amount of hours spent behind those templates to basically get you those strategy templates like that could be packaged and sold on its own for thousands and thousands of dollars, and algo traders wouldn't even blink an eye. So if you can put some value behind something, it's the software and the manpower that goes behind being able to ensure you get the best of the best. We have a video course that goes into this, and we're also doing a deep dive tomorrow live. This is a live event. Okay, this is a live event tomorrow only for algo traders using the system. We're going to be breaking through the signal, and we're going to be doing a deep dive on the engine so that you understand how to use it. Okay. So if you were to package this up, and I could add that in there because that's definitely worthy of it, but we keep it all consistent. You're looking at about $6,900 for this algo, right? We're going to launch it for $1,000. I mean, it's a giveaway at that point. Like, you're getting it. I don't even want to say it, guys. Like, you get the best value for the best product for the best price, hands down. And I believe that thoroughly. I know who's doing I know what's out there. There's nothing out there comparably to this. So, not a hard sales pitch, just a super big value prop. Yes, we got to sell a little bit of selling. Yeah, we're a business. We gotta sell the software. That's what we do. But if you guys want to get behind this and use it, right, you guys can definitely do so at a huge discount on the launch. Now, Jim's going to put the links in the chat box so you guys can purchase this. And let's talk about our guarantees, because we always get people asking about the guarantees. We understand that it's an expensive industry. Like trading in and of itself is expensive. Software, education, trade rooms, platform, data. Holy shit, when does it stop? Right? Love it or swap it. We have close to 20 algos in our store, and we've also got 60 indicators. And we know that there's going to be a lot of you that are going to love it, and there's going to be some of you that are going to want to swap it. You know, you don't want it, you don't like it for whatever reason, it isn't you, or you don't have to feel like you're just pigeonholed into a situation where you can you have to use it. You can, within 30 days, you're going to know within a month if this is something you want to keep or not. And if you don't, go to our store, talk to Jim, talk to Ashley, say, hey guys, I'm going to implement my love it or swap it guarantee. You just go swap it out for another product. No questions asked, no hassle, no problem. All we care about is you being happy and coming back and being grateful that you love what we do. That's it. That's all. Right? That's it. That's all. Like, there's no issue on that. Right? So you don't have to worry about buying something today and then it's not going to get used and you're going to, oh my God, I wish I didn't spend any money on that. You might buy it and you say, holy shit, this is exactly what I was looking for. That's what we want. But for those of you that are saying, hey, you know what? You guys have a different policy? Yeah, it's right here. Okay. So just make sure you guys take advantage of that if you need it. Okay. And tomorrow, very, very important. The guys are going to be doing a deep dive on the matrix. And we promise you, you're not going to have to take the red pill. Right? Like just, we're going to come bring in red pills, blue pills, and spoons. For those of you that missed the beginning of the event, you'll know my joke when you watch the recording. If you work, we'll record it. If you buy the product, you can have it, right? It's for those of you that are using the product, you want to make sure you're coming in and getting hands-on training with that. And if you can't make it, then watch the recording and we can definitely set you up with one of your team, with one of our teammates. Yeah. Okay. Make sure you're there, guys. It's important that you learn this stuff. Okay. So let me run a poll. Let's run a poll here. So do me a favor, guys, and I run this. You can run it at night, Dancel. Yes, it can trade at any market. Yeah, we just didn't test it in the overnight session, so make sure you run some tests and some optimizations before you do that, and come to the AMA to learn how to do that if you haven't done so already yet. So, guys, I'm going to run a poll here. And the reason I ask this is because I need to gauge how many people are coming into the AMA tomorrow so we can prepare for it, and how many people need help with support, because we've only got a certain size team to be able to do certain things. And I want to make sure that I understand the amount of people that are taking advantage of this, because I need to know from a management perspective how to help you guys. So just do me a favor and please just fill out the poll. And just help me and my team out, guys. Like we put a lot of effort in to be here to help you guys. Can you just do me a favor? Let me know if this is it, if you're in it or not. I need to know, because I want to make sure that we can get you going here. Yeah. What I love about this is you can run it on all the markets. Like most systems, like one market, two max. Like this hits on everything we put it on. Like it's amazing. So for those of you that have questions, right? Jim, you, Pete, going to follow up with them. Okay. Pete's there. Yeah. Pete, make sure you work with Jim to follow up with everybody that's requesting some help on this. Get them in the door, get them up and running, get them what they need to be able to help. And yeah. Great. And here's what we're going to do, guys. Okay. Because I know it's needed. I want to thank everybody for your patience, because a lot of you have bought other algos, right? A lot of you guys have bought some of our other systems. So here's what we're going to do. And this is just a throwback to basically give back to everybody. Okay. We are going to put together a deep dive training on the engine so that everybody can learn how to build and test their algos. Whether you're buying this algo or you've bought other algos. My promise to everybody here is that we hear the chats. Like, I'm always, my ears to the grindstone, guys. I'm always in the threads and I listen to everybody that's requesting training. And I want to thank you guys for your patience, because my team and I have been working heavily on the TickBlaze rollout to get the product, the platform live. But what we're going to be doing is putting together another training. Jim and Jeff and I are going to put together a training on the engine, so that depending on which algo you purchased, right, wherever you bought it, whenever you bought it, we will ultimately be doing a deep dive. So come there with your algos and come there with your questions, and we'll be running that and help you guys out. So anybody that feels like you didn't get the training in the past, I want to thank you. Apologize for taking so long. It's just been, we're only so many people, and we really do put in a lot of hours to try to get things for you guys. And I want to thank you guys for that. I know we may not please everybody, and we definitely try. And I want to thank you guys for your patience and your understanding, right? We only have so many people that are on our team. Thanks, Alan. Appreciate the kind words. Yeah. So all of the price action, Bradley's asking a great question. Bradley's asking a great question. Will this work on TickBlaze once it's launched? TickBlaze is going through several stages in the beta. It's exciting. And once it's ready, once we go live, all of the price action algos will go over first. Anything related to software will go over second once the software is made compatible in the platform. Yeah. So all the price action algos will work in TickBlaze once the code has been brought over. Yeah. Price action is easier to port over than the software stuff. So we'll do those first. Great. I want to thank everybody for being here. Thank you guys for joining me today and my team. For those of you that haven't filled out the poll, I've got 50% of you that have filled out the poll. Throw me some love here, guys. Either you need help or you're buying it. One of the two. Let me know. Talk to me, guys. Let me know. Fill out that poll. It should be there on your computer somewhere. It's on a pop-up if you're on a mobile or another, right? Do you guys want to see something sexy when it comes to quant strategies? You guys want to? I wasn't going to do it, Jim. Jeff, I wasn't going to do it.
Oh, here we go.
Oh God, I shouldn't have.
Here he goes
I
again down
had
the
to.
rabbit
It's been
hole.
bothering me. I needed to. I needed
Oh,
to share it.
you know, I say do it. That's funny.
I will do it if everybody answers the poll. So everybody answer the poll right now, and then I'm going to pause the recording, and we're going to do a private demo of TickBlaze.
I think this is a good thing to do. It's been a little bit a little while since we've had, I don't think we've really gotten a chance to show everybody, huh?
Yeah, Joe, you're going to get an answer to this. Yeah, you're going to get an
Yeah, it's
answer.
pretty amazing, guys.
I had a big meeting with Benzinga today. Had a big meeting with some big hedge funds too. Pretty crazy stuff's about to happen.
Yeah.
Oh yeah.
Big
All right,
things.
guys, I'm going to turn off that poll. Thank you. Pete and Jim, you guys are going to run the follow-up on that. And it works with every market, Ed, that you run on Ninja. Yeah, the algos that we're building with ARC run on Ninja. Yeah, perfect. So I want to thank you guys for the algo presentation with ARC. We'll follow up with you on the emails and the links, and I'm going to give you guys the recording. I'm going to stop the recording now. Okay, I'm going to stop the recording now, and I'm going to show you guys a private demo. Are you guys okay with that? Give me a yes. You want to see something crazy, sexy, and amazing, cutting edge, innovative that no one else has seen around the world. You guys open to it? Okay. let's end that recording. We're going to stop it now. Thank you guys for the webinar.